The Shanghai Gold Exchange was set up in 2002 and is now the world's largest exchange of physical. In 2023, they processed 75% of the total gold volume. The custodian warehouses began later in 2014 to allow foreign participation in the Chinese market. Not much moved on that second bit until very recently, but very suddenly. In 2022, $300 billion in Russian FX reserves were frozen, and that forever changed global perceptions of the risks of having sovereign reserves subject to seizure. Central bank gold buying hit records going back decades, and gold prices have gone straight up. China's gold custody plan will move both of these trends farther and faster along. It will further de-dollarize global trade and create even more demand for gold. Earlier this year, the SGE opened up vaults and trading contracts in Hong Kong. Here is the press release from regulators there announcing that Hong Kong was open for business to serve governments and institutional investors who are active in gold markets. And Hong Kong is also part of the London Metal Exchange's global network. That's also important because the gold trading can happen here in Asia and outside the trading centers in Europe and New York. And as central banks shift from treasury bonds to gold, it means higher interest rates for the American government and borrowers and higher gold prices. Here again is a sanctions problem. 32 countries have been targeted with economic sanctions in 25 years, and so there is a ready market for a new system. But regulators crossed the Rubicon when Russian reserves were seized. It was only a hypothetical risk before. But now any country or company doing business in Western countries and holding funds in Western banks suddenly realize they could be bankrupted overnight if the political winds blow in a different direction.